Good evening, everyone, and welcome to Admiral Markets webinar today, 17th of August 2015. My name is Nenad, and I wish you welcome. So we are having another trading season now, and I hope that if you were on holiday, that you charge your batteries, and that we can start new trading season fresh and ready. As you already know, August is not a high moving month. Usually during August, there are no lot of opportunities for many pips, but because it's the end of August, some movements can be possible. And starting up, of course, from September, we will see better liquidity, higher volatility, and opportunities to make even more pips. So guys, I wish you welcome again on Admiral Markets session recap. And today is our first recap for new season, for new trading season. So of course, before we begin, we need to hear some risk disclaimers. Online education materials are developed by Admiral Markets as Estonia, and they're developed for a global audience. And if you want to get a corresponding information on charting conditions and any other detail, you should visit admiralmarketsglobal.com, select your country, and contact an appropriate entity. Risk disclosure statement is stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. And Admiral Markets takes no responsibility for information accuracy. This is my analysis, my personal opinion, and this is in no way AMUK's opinion. Forex is risky, you should take it as that, and this webinar is for informational, educational purposes only. So for all of you who still do not have Admiral Markets Supreme Edition, download it. It's free for all users. Then sign up for Admiral Markets webinars. In September, you will see a special webinar series which I prepared. It's called Price Action Trading School, or simplified PATS, PETS. So PETS will be available for all students. I advise you to sign up for the very first webinar because we will be learning price action from the scratch. So I will be explaining price action systems from the scratch, okay? So you should apply to those webinars. Of course, it will be held during the whole year because it's a school webinar, and it will be held each second Wednesday, okay? And you can download Market Supreme in Traders Room, okay? So, risk disclaimer for our recap entries. As you know, all our session recap trades and analysis is done by Camarilla MACD, my proprietary method for price action trading and analysis. Okay, you need to give price a breather, guys. So that means usually you enter within 5 to 10 pips of the predicted level if it's in agreement with your system. Okay, the analysis which I post with Camarilla MACD, if it agrees with your system, then it's a double confirmation for you and you should enter. Usually, so far, we had more than 150 pips on average, just counting session recap trades, okay? 150 pips average, just counting session recap trades, okay? Also, I need to tell you that you need to always respect your stop loss. Okay, always respect your stop loss. Add a spread to your stop loss. And when you trade, we take only one position. Okay, you know that because first touches of the zones or levels are most profitable ones. Okay, so when the price reaches our zone, first time, we are ready to sell. So you should make either a pending order, or if you want to make a market order, you should then observe when the price enters within the zone and search for an entry. Okay? And as always, first touches of the zones are most profitable ones. Position trades are called trend trades. Alternative trades are counter trend trades. Breakout trades and scalp trade levels are done independently. They're counted as a second entry. Depending on time and volatility, usage of trailing stop is highly recommended. We do not take any trailing stop below 20 pips. So you should follow the price, you should watch the price, and if you see that the price is going in your direction, then leave it. If you see that the price is trying to whipsaw a little bit, go up and down, then after 20 pips of profit, I advise you to use a stop loss. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. They are done on 4-hour time frame, so they can be valid for 3 days. Of course, Monday, Tuesday, Wednesday. Scalp trades should be done at or very close to important support resistance levels. All those levels are calculated by historical levels and Camarilla. You can add these levels to your system. Pay attention to Twitter updates and observe pips pool is the maximum available number of pips you could have got on recap entries. Or my analysis is also proceeded through Twitter. So if I say sometimes, for example, it goes in our direction, that means check your trade. Usually it's in a good profit, okay? The first question Kellen is asking, when will you be presenting HARP? I can hardly wait for it. It's not called HARP. HARP is something different, but Heiken Ashi, my proprietary system, which I created, will be presented, I think, in September. I have reserved a spot for it. So it will use Heiken Ashi candlesticks, and it's something new. It's something which is unique, okay? And HARP is something different, okay? We will talk about HARP when time comes. At this point, I will be presenting later Heiken Ashi, okay? System. It's not hard, but it's good. Okay, it's my also. And do not forget that you always follow me on Twitter. And of course, if you have any question, for example, of my session recap trade, if you want to have an indicator, if you want to ask me something, I will give you the link for my Forex Factory thread. You know that already, my Forex Factory thread. Let me find it for you. So guys, you can post questions. You can also post your analysis. You can post whatever you think it's okay for us to see. Okay. And of course, my thread is called Spider's Den. Okay. And you probably know you can see it. You can see it here. Okay. And whatever question you have about trades, whatever, you can ask me freely, guys. You can ask me freely, okay? So Spider's Den is open and you're invited, guys. Okay? So comment, ask questions. If something is not clear, just feel free to ask me. Okay? So that's good. Now let's go, because we are starting a new trading season. And by the way, I had really good holidays. Thank you for asking. I had great holiday, charging batteries completely, and you know, when you're close to sea, it's always great. Uh, so holidays were excellent, and to be honest, you know, from time to time I paid attention to charts, and everything was clear. So nothing unexpected has happened. So you know, it's not a problem for me to completely read the charts, even on holidays. Uh, the question about forums, Chris has started a trading group on Skype. Well, yeah, but I don't have I don't have the time for, at this point, for Skype trading group. And Spider's Den thread on Forex Factory has gained more than 4 million views so far. It's one of the most read threads on Forex Factory. and I just cannot abandon it. There are a lot of people who are following the trend. And of course, guys, you can always ask by Admiral Markets website, by Twitter, by email, whatever you need. I'm here for you. You know that already, right? So let's start with today's slides, because slides are something which we now want to see, because we are very close to our entries, right, on euro dollar, okay? So what can happen is euro dollar can reject from, and it already rejected at the time we are having the webinar. You see 58 has been reached, so anywhere from 50 to 60, I think it could be a buy position with 40 pip stop loss and with 1.1160 target. Okay, so euro dollar is close to our entry, and by the time I have been making this webinar, you see, and euro dollar has come into buying zone. So if there is another chance to buy it, well, as you know, always do not risk much. Okay, 0.5% to 1% recommended risk. And if you take all these session recap trades, do not go with more than 0.5% risk per each trade. Okay, you don't want to get above 5% margin, because then you're at the edge of gambling. I'm not saying, guys, that you cannot gamble in Forex market. You know my opinion. Forex, you have more chance to win if you gamble on Forex than on casino. It's normal. But in casino, you should avoid it. Okay, if you're a gambler, then gamble in Forex market. But still, if you want to trade properly, then you will respect 5% risk margin. As soon as you go above 5% risk margin, your account is endangered. I don't know if other mentors or traders were telling that to you, but 5% risk margin is the upper side, the resistance, okay? You don't go above it, because as soon as you cross 5% threshold, you're in danger zone, okay? So if you want to buy euro dollar, this is the chance, 50, 60, okay? Stop loss here, 1160 is your target, okay? Now I will show you the reasons for a potential long entry, okay? The reasons for a potential long entry. Okay, let me quickly switch to the chart. Okay, guys, here you can see the screen. Okay, so this is my screen. Okay, and you can clearly see that currently on 4-hour time frame, do you see this? So this is some sort of W pattern. Now we are not talking about longer term perspective, because longer term euro dollar could probably go down to touch 0.3, or levels which I posted some time ago. So we are not talking about a long-term trend. We are talking about intra-week intermediate trend. So this is uptrend, clearly, because you also have a confirmation. This is giant. You see, this is giant pattern, and it's called WK pattern. It's giant. But because of the August and the nature of the August market, we can easily say that there is a ranging market. So we are in a range-bound market conditions. If you remember, before I went to vacation, I made a Forex Street prediction on Forex Street poll saying that pound dollar will be moving in a sideways range, and that happened. It's not just about pound dollar. A lot of these pairs have been moving in a sideways range, okay? So euro dollar is bullish on 4-hour time frame. There is W on 4-hour time frame, and there is also a range on 4-hour time frame, okay? See? Range and W. Now, you want to see where it might be bought from. So because we are having a correction on 4-hour time frame, we can easily see that Fibonacci retracement comes very close, okay, to our, sorry, this is it. We need to put double Fibonacci here, okay. So this is 1 and this is 2, okay. We will be going from this point to this point, okay, here. So guys, at this region here particularly, we have a good confluence. So it's something like 38.2 and 38.2 double Fibonacci confluence, which is very close to this region, okay. Now this region is also good because we have intra week inner trend line, okay. You see this? Now this spot, this region here, 60, should give some support, okay. Now if this trade is invalidated, euro dollar could easily hit 1.20. So it can go below this low. So this is the minimum stop loss we can place here. You see, low was 23. So if 23 is broken, it will probably hit 20. So we want to have a, I can say, we waited for this retracement. So this is not a huge potential trade. But if this rejects from this region, it could hit 1.60 again. Okay, if it rejects there, I will show you now. Okay, let me see if I clicked here, there. Okay, doesn't matter, I will make it again, no problem. Okay, so this one and second one is here. So 1.60 comes exactly at this spot. Now why 1.1160 is important? Because we have double top here, and we had in the history, we had historical buying from this spot. So you can see how historical buying happened 4 times, guys. 1, 2, 3, 4, 5 times historical buying from this spot. 1, 2 times in near history, now moment, and in the past from this spot it shooted up to 12.16. From this spot, guys, it shooted up to 12.16. So it's not just a mere coincidence that I have chosen this spot for buy entry, okay. So double top here, previous buyers, rejections, we are at the buying zone. Even though if it, you know, Forex is very unpredictable, so if it breaks down, you know, it can hit the stop loss, but logic is saying this is now buying spot for euro dollar, okay. So inner trend line, double Fibonacci confluence here, the zone, we have also historical buyers. So we will see if it jumps, it should go up and potentially hit 1160. 1160 is important also because we also have historical selling. 1, 2, 3, 4, 5, 6, 7 wicks, and these wicks, and you will be learning about wicks on my price action trading pets course, okay. You will be learning about wicks. Those are best signals for historical versus now moment buyers and sellers, okay. So by watching these wicks carefully, we can say that if euro comes here, it could be sold. So this could be, and this is our final target, okay. So euro dollar, pound dollar is ranging, and guys, be very careful for this trade. It's take it or leave it. because with CPI data released tomorrow. So I'm not sure that we will be having a good setup prior to CPI, but if it happens that we are getting a buy position, it's not a big stop loss, it's only 35 pip stop. So unless you're risking, your risk is big, I think we could try to exploit this position. But guys, CPI will move the market, okay? It's inflation data, and traders will probably use, and investors will probably use CPI and inflation data to estimate a probable rate hike on a rate hike on GBP. So we are not sure now what can happen, but if there is a big deviation between the actual result and forecast, the market will definitely move. So guys, be careful. Maybe the best option is that there is a not big deviation. If CPI comes exactly as forecast, we could deem that as bullish sign, so it should be bought. So, but this is the level, the zone where I'm looking to buy, because if you read my analysis today, guys, I told you that we are ready to sell. I will show you the analysis from today, and I'm sure that you have already seen it. But if you have not seen it, guys, at the time, yeah, CPI, yeah, Sorin is saying CPI for dollar on Wednesday, exactly. But if you remember the analysis from today, okay, guys, you see it's almost the same. If you sold it at this time while I was publishing the analysis, it was just at the border of this zone. And just a moments after, it went down, then up. So this could have been sold up to 56.90 and 70. So this is whole the zone for selling. Okay, clearly stated by 1, 2, 3, 4, 5, 6, 7, 8 wicks, guys. Okay, this is very important, those wicks. We will be learning that together, okay? And you see, it was rejected to the downside. Now I want to see this one, L4. You see, there is a probability this level could spike it up, okay? There is a big probability that the level could spike it up. So guys, 55.30 can be good, but because of the nature of CPI, okay, this is the whole analysis, and because of the nature of CPI, guys, okay, it could go up here, then try to go down. If you want to take this trade, I advise you then, if you get a setup before CPI, you can do that, and maybe, I'm not sure, no, it's not very close, but it's close to this level. But if something happens during the night and it touches 57.00, at least I'm really positive about the fact that before CPI, if it touches this zone, it can be good at least for a scalp trade, okay? Because this zone now is protected, 57.00. That zone is protected, I will show you. And you can easily see, guys, here, okay? This is a sort of inverted head and shoulders pattern, okay? So it looks bullish, right? And if you know that inverted head and shoulders is indeed bullish, then it should reject from this level again. Now I'm saying 57.00 is protected. It is, because guys, you're having a double top here. So if it shoots up, look, and you can zoom into daily chart, it still has some resistance here. Look here, 1, 2, 3, 4 touches, breakout, pull back, continuation, but it was not, it did not go far, then breakout, retest, continuation. So 57 is good level. It's It's a rejection zone. So I'm not sure that the spike will be good enough to hit our stop loss, because this level should be protected. Okay, it should be protected. And guys, once you learn price action with me, you start learning price action, you will know how to identify these patterns here. Okay, this is bullish. Look how bullish it is. This is a pole. This is a sort of a flag. Okay, and this is a pole. So that is why I have prepared two-way trade for you. If it rejects from 57, this pattern will be invalidated, because it needs to go above to be really, really bullish. But if it's bearish and investors want to be still bearish, I mean bearish, not literally, because this is all range, guys. This is range. I told you that August is ranging market. So I'm talking from a range bound market perspective. Bullish within the range and bearish within the range. Okay? So if the investors want this pair to be bearish within the range, they will sell it here. You see that there is a big range here. Buy, sell, buy, sell, buy, sell. There is no trend now. There is no clear trend. This is range bound market. So this is the sell spot, this is buy spot. As I say, take it or leave it, but be careful. I always state when there is strong news coming in, and impending CPI data is indeed strong one. So guys, be careful. If you are worried about your trade, then take lower risk. You will be happy when you make some profits when there is some risky event. But still, you have only 30 pip stop loss. And if CPI comes bad and GBP is found close to that spot, that could be a really great trade. Or if it's good and GBP is close to this spot, okay? Now, Australian dollar pair. Australian dollar, guys, is in downtrend, okay? But beware. Again, Monday, monetary policy meeting minutes. So it will be effectively Tuesday, because it will happen after the midnight for my time. But still, guys, there is a possibility that Australian dollar will reach 74.15 by the end of the trading day. Australian dollar is the strongest of all pairs today. Every pair has dropped. Talking about majors, euro dollar dropped, pound dollar dropped. New Zealand was behaving correctly, but Australian dollar stood strong. China shook the markets here, but it is correcting now. And you know, and you will be learning also that, you know that when there is big news spike, markets tend to correct themselves. So this is, yeah, this looks like a downtrend, but still, guys, this is a range bound market. And the price is correcting itself. So if we get a 4-hour close above 78.6 of retracement from so-called down spike, we will hit 88.6 and close to 74.50. Now, this level is protected also by a trend line, which acts almost as a double top, and indeed this is a double top. But there is one trap probable, and this could be a trap for bears. If bears think that they will surely win this level, they might be on the wrong side of the market. Because V-shaped reversal, which this is, can easily spike on good report from Reserve Bank of Australia president. If there is a good report, markets can hit this level and even spike more. So that is why I have prepared another potential trade. Maybe that is a better trade than this one, because you are not, if 74.40 is broken, price will probably be spiking up in a candle, in a single candle. And use a trailing stop, because that will be news driven momentum. 75 can be hit, but if it's a real downtrend, it shouldn't go above 75. So once you see market struggling here, you can try to take a trade. It goes with that downtrend in ranging market conditions. Okay, so range bound market, and we have a sort of downtrend now, because it should be rejected. But because there is monetary policy meeting, anything can happen. It can reject, it can proceed. So this is one I will be very careful about. But just for your information, this could be better than this, but wait for the report. Okay? Australian dollar, as I say, wants now to break this level, and if it closes, if 4-hour closes above 78.6, it could really go to test this one here. But initially it should be rejected from this level, 74.30 and 15. Initially it could be rejected. So at the first touch, right? So pay attention. You can scalp, you can trail the stop, you can turn a scalp into intraday or scalp swing. But this is the opportunity, okay? But be careful, guys. Euro yen is in uptrend, same as for euro dollar. When euro dollar goes up, euro yen goes more to the upside. Okay, euro dollar, euro yen. Euro yen, this is uptrend, okay? Up, 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 up we go. Place a Fibonacci here, and you will get a confluence point. Confluence point is 137.50, okay, around this level. 137.20 stop. 139.20 is potential target. Yen is weak. Yen has problems. Okay. Our colleague there, Mr. Darren Sinden, has been talking on Tip TV. I have shared a Twitter today, so you can, I advise you to see it, why Japan has so big and I can say huge problems. Read his interview, his insights. There are a lot of concerns about Japan. So even though euro is not so strong, it's still stronger than yen. Okay. So euro yen potential buy trade again around 50. It is happening because we had a, you see, by the time I was preparing the webinar, it just has hit my entry spot. And clear logic is this: 61.8 historical buyers, both candles have been closed above 61.8. So rejection from this level could yield us really up. And if this is rejection, and this rejection is so strong that it reaches again this level, look, 1, 2, 3, 4 touches of this level, it could be broken. So initial stop grab could hit 139.20. But it can only happen if this level is broken. Okay? If that level is broken, 139.20. Look at the power of that level. Previous high, above this high. Okay? So pay attention to it. So it should reject from this spot, go up, and probably, well, maybe it will not hit so soon this level, but at least it should spike up, giving us some profits toward this spot and this spot. This is M, but this is retracement, because this is, you see, this is uptrend, and this is retracement in uptrend. Okay? And you can see also that this zone is really protected. Okay? This zone here. Now, final $1 yen, I would be buying dollar yen on dips. 124.20 entry, 123.70, and potential 125.90 potential pip count. So this is it. Let me open dollar yen. Okay, very close to its buying spot, and this looks bearish, right? But still, this is zigzag in uptrend. High, oh sorry, low, high, higher low, higher high, higher low. Then we have some high, but still higher low, higher low, higher high, higher low, then another low, but another higher high, then another drop, but still this is touch of the trend line. So this is still bullish. And the only way it can become bearish if we get a stop loss hit and close below 123.75 to 70. Okay. So at this point, this is deemed bullish. Okay. So dollar yen plan. Guys, if you have any further question, do not hesitate to ask me. I will be rolling these slides again so you can snapshot the chart. And if you have any further question, you can ask me. So euro dollar, pound dollar, Australian dollar, euro yen, dollar yen. A question Arlie Peter is asking, I would like to see euro dollar again. Slide or chart? This is a slide. Yeah, this is the slide. So euro dollar. Okay. And euro dollar chart here. So guys, sure, you're welcome, Arlie. If you have any further question, do not hesitate to ask me. So there are two fundamentals happening soon: Australian dollar meeting minutes and CPI tomorrow. There will be also CPI on dollar on Wednesday, but first it will hit UK. You see how Australian dollar is struggling to break this level. So only 4 hour close above this level has a potential to drive it to the upside. Okay. Another question, do you wish another pair? So yeah, you can just ask whatever you need. Kellen is asking, why is the close so important? Because the close is what definitely makes a border between bulls and bears. Okay? Pay attention to this one. Good question, Kellen. Why is close so important? Look at this close. So first we had 1, 2, 3 rejections from the zone. Then there was a close above the zone, retest. There was slight drawdown, but look again. As soon as it break this level, close above it, it made new high. Why is close so important? As soon as it closed below this level, it made a new low. That is why the close is important. 4-hour close above important or below important level will usually give you potential trend at least for that particular day, or it will gain additional momentum. Okay? Additional momentum. Jeff is saying, welcome. Again, okay. Thank you, Jeff. You're very kind. Derek is saying, Nenad, your webinar should have been on Sunday. Dollar yen just touched 124.20. Yeah. Exactly. 124.20 was a good spot. I bought dollar yen and I had some longs. I closed for 30 pip profit, but yeah, that is the level to go up. Any idea which direction when euro dollar break from the range? Not at this point. We can only trade what we see, guys. So we can only trade what we see here. I will open chart again. So you see, this is range. You just don't know what investors will do in September. For bigger movements, we need to wait September. But still, there are possibilities to trade even when markets are not moving that much. Okay. So two most important points, but you see, this is now the important point, and this is also important point here. But this is range effectively. W pattern, which marked the beginning of bullish behavior, and you see range. What trailing stop should we use in Australian dollar breakout buy? Well, because it can be a risky trade concerning a meeting minutes, use 15 points stop loss, trailing stop, sorry. Once you're in profit, 15 to 20. Just see how the price will behave, something between 15 and 20. Okay? For your breakout buy trade, if it happens. You're welcome, Arlie. Okay? If you have, guys, another questions, do not hesitate to ask me. So there will be a lot of news involvement this night, especially if you count Australian dollar and potentially GBP dollar. So be careful about it, guys. Be careful. Do not overtrade. Do not ever overtrade, because it can be disastrous for your account. Okay, do not overtrade. Okay. So this is it. If you have any questions, feel free to ask me. If not, then guys, we can assume this is everything is clear. Another question. What would make Australian report good? Okay, I will show you. Well, you should pay attention to this. Okay. Try to read. Okay, guys. Do you see this? Try to read forexlive.com. Okay. Forexlive.com will be probably covering the event live. So read it. Everything will be explained by Forex Live authors, writers. Okay? So just pay attention to this and you will get a cues whether the report is good or not. Okay? Arlie is saying, sorry, I was late because my tablet didn't play this webinar. I had to get a laptop very fast. No problem, Arlie, no problems. No worries at all. Okay? So this is what I really love to read, and because their writers are also having fundamental explanation between those reports, and it's good because I don't have to read it myself very, very carefully. They do it for us, so this is okay. Forex Live, they will explain the movement and the possible impact on meeting minutes. But before it happens, guys, if report is good, you will probably, guys, see a spike on Australian dollar. A spike. Now, as you can see, it's trying to go up. You see, but it's protected. This level 73.90 is heavily protected. A lot of history now moment sellers here. Okay, so that is why we need 4-hour close. 4-hour close will signify the break of the level and a potential upside jump. Okay, so guys, once more, euro dollar, pound dollar. Okay, Australian dollar, euro yen, dollar yen, and that's it. Okay, so, and also if euro dollar wants to really jump off this level, because the correlation for euro dollar and Australian dollar is high, and it should really get to the upside. Let's see the current correlation. This is great tool, guys. I already explained this tool to you. So correlation in 1 hour is positive, plus 12. But because Australian dollar has been very strong compared to this currency, every single currency major fell against dollar pound except for New Zealand dollar. But you see, Australian dollar stood firm. So when you see that Australian dollar is staying at near the same levels and it's not dropping as euro dollar and pound, that signifies the strength of Australian dollar itself. Okay, and even on 4-hour there is positive correlation. Let's see, daily, wow, daily correlation plus 83, guys. Yes, Arlie saying, I have been using this almost every time I make a trade. Very helpful correlation matrix. Yes, look, daily correlation for the last 50 days. Plus 83, guys. It's strong correlation. So what I think is, and you see also by correlation, if euro dollar rejects from this level or zones. Now it's closed, so 50, 60. It can also push Australian dollar for a breakout trade. So pay correlation to euro dollar and movement when it gets here. Do not enter immediately if there is news coming in. Then there is better to wait for this region. If you want to get a scalp, okay, couple of pips here before the news maybe can be fruitful. But if report is good, this can be broken to the upside. So pay attention to it, and as I say, be careful, guys. This is important for Australian dollar. So guys, I don't see any further questions, so we can assume everything is clear. I will be here with you every day. I will be making whole new analysis. Price action trading school starts in September, so Heiken trading also. So sign up for those webinars. Read the analysis. I hope you made money with pound dollar today. And well, Arlie is saying thank you for your time and I hope you had a nice vacation. Yes, Arlie, I had a good vacation. I'm ready for new challenges. And Arlie is saying I made money with your tip. Which tip, Arlie? There are usually a lot of CFC. There are a lot of analysis which I publish, so I'm not sure which one. The price action school, when it's starting, sign up. I think it's for 2nd September. I have already scheduled it on Admiral Markets website, so I think it's the 2nd of September. Arlie is saying pound dollar. Yes, pound dollar, Arlie. Great, great. Well, today, as you can see, I published the analysis, and what happened basically is after I published the analysis, it went very close to our entry zone, but that was the trend. Today we had in that range in market conditions, we had a drop from the top to the bottom, as you could have seen on chart. Okay, so I'm glad that you made money, really. It's always good to hear that. And guys, that's it, right? So I will be here with you soon. Cheer up, new trading season is starting. September will be even better because market will move better. Any questions, any comments, any help you want, feel free and do not hesitate to ask me. Okay? I will be here with you soon, guys. Cheers, and as always, trade safe.